All right, what's up, everyone? Welcome to today's live trading show with the Fivers. As you can see, I'm Jonatan, and then we have Victor, aka the Masked Trader. So, yeah, you guys saw that yesterday. Victor had a very nice entry on GBP USD, and as you might, he went long. And I'm sure you guys noticed the insane move that we had earlier today with the interest rates coming out of the UK. Very good move. So Victor's going to show his trade later in the live stream. How are you doing, Victor?
Hi, everyone. Hi, Jonathan. I'm doing great. Yes, of course. After a nice win, you feel great. But separate from that, I'm feeling great because I'm in the flow. I'm when you feel you are in tune with the market, it's even if you're wrong, and I was wrong in a number of setups, but I can, when I feel I can read, not feel, but when I see that I can read the market, that gives me a good feeling for today. So I'm ready to go. How about you?
Oh, well, I'm all good, man. I'm going to share my screen here. I'm currently up in. I like looking at my unrealized profit and loss here for 700 USD. The thing is, though, if I go to history, you'll see that I lost $800 overnight, and that was because of. Oh, look at that beauty. Look at that beauty. Look at that entry. Look at the 50 minutes. Ooh, look at that insane good entry on EU. I'm really hoping that it's going to continue lower. But what I had on yesterday, I entered a short on NCD USD. And I'm not sure where this move came from. So around, I believe, 5 in the morning, you had this big spike on NCD pairs. Now, I haven't looked at the news or anything. I'm not sure where that comes from, but that's, that's not really a problem. The problem is not that price moved. The problem is not that the stop loss got hit. The problem is the fact that I risked 1 hour on both of the trades. So 0.25% of the account on both of the trades, which in combination is actually, it's basically, I'm going short NCD USD while going long AD NCD. So I'm I got double exposure towards the New Zealand dollar, which if you are double exposed, you're supposed to divide risk. At least I'm supposed to be dividing risk up between these two positions. So that's a mistake I did. So I'm down, 2R instead of 1R, which that sucks. That definitely sucks. It's a mistake that I shouldn't have made. I'm not really sure what happened, but I do think that, I talked about it even in Monday. You guys hear me talk about how I'm not feeling very in sync with the market. I'm kind of like feeling like I'm on the verge or on the edge of going into tilt, and maybe that's why maybe I got lost focus for a minute, and that's the thing. That's the thing with trading. You really need to be laser focused. You need to make sure that you got everything under control, because as soon as you let your guard down, the market's just going to beat you up. And that's something I see over and over again. You make one small mistake, and that can cost you, in this case, it cost me double than what it should have done. Which in long term, if I keep making these mistakes, if I have a 2R loss instead of 1R loss, that's obviously going to be detrimental to the equity curve. So small things that you might not think matters a lot in trading actually do matter quite a lot.
Yes, I agree a lot with that, because it is when you do backtesting, when you analyze and monitor your results, you will see that minor changes you may do in your flow, in your trade plan, can make a big difference, because there are maybe a pip, maybe 2 pips, maybe half an hour there, a quarter of an hour here, but in the long run, it make the difference between being very profitable and being, almost break even, or even losing, making that month a losing month. It's those little things, those little tweaks that we don't usually expect them to be much, but they, in the long run, if it is something that you do recurrently, it will have a big impact, because those small pieces will add up in the long run. I see that, I've seen that, and when you're tweaking your system, you know that too. One simple example, I have seen, and this is edge, right? I have seen that under a certain amount of pips, and I go for very short stops, right? That is my style. Only a few. But I know that there is a sweet point, a sweet spot where when I go lower than this number of pips, I need to do something different, right? And that's something that you only get from doing backtesting and backtesting and forward testing, and analyzing your data well. For example, my risk is fixed in terms of a percentage of my available drawdown. But when I know this from my data, when the stop loss is below a certain number, I need to do a modification to my risk setting. It's a little bit advanced, but I know that when I do that, I get more profit. And it's a little thing. It's a little thing, but it makes a huge difference in my equity curve. That's something similar to what you're explaining, Jonatan.
Yeah, definitely. I think it's that definitely. I think that's also why I think a lot of people, we talked about this. I think yesterday, where a lot of people are break-even traders, right? And I think that's because they get a good they get a good winning streak, they get a good couple of trades in, and then they fall back to where they started, because they make small mistakes, and those mistakes kind of start compounding. Guys, I want you all to make sure that you like the video. Everyone that's watching right now, make sure that you do like the video right now. We do have significantly lower viewers in today's live stream, and I think there's something wrong with the notifications being sent out. So let's make sure we do get some more people in here by liking the video. And then, of course, as you all know, the number of likes is also what determines the number of accounts that we're going to give away. I'm going to see if we have any questions in the comments. Do we have any good comments you want to bring up here today? How do I do the liking? Well, you press the like. You go on YouTube and you like the video, just like you're liking any other videos on YouTube. Should be below the you look at my face, and then you go down and then a bit to the right. That's what it is. Okay, so yeah, maybe it's a problem with YouTube, right? So let's see how many we should perhaps there is something. All right, so it says here, perhaps there is something wrong with YouTube analytics. Happens before with Trade Delicious stream. Yeah, maybe that's why, because we're like, it says that we have 10 viewers, but we have way more people than 10 in the comments, so should be having way more. All right, so let's not focus on that. Today we're gonna have an exciting episode, because in about 50 minutes or so, that Saul, the CEO of The5ers, is coming on, and he's gonna perhaps do some live trading. I know he's very busy working on the back end, something that he might be talking about, maybe not today, but tomorrow. He's gonna have a open hour in in Discord. So if you're in the Discord, make sure that you check out the announcement channel and the schedules where we have the time and everything and date for when Saul is coming on there. He's going to talk about some of the, and this, you're going to be asking him all your questions. And then later, I believe later we're also going to have a Twitter Spaces with Saul and Alex. So make sure that you're in that one as well. If you have any questions to the CEO, the boss, the big boss. Victor, I want you to I want you to show that GBP USD trade that you took. That was absolutely beautiful.
Yeah, sure. And it will be actually. Let me put my MP5 on screen. When I was yesterday, when I showed this trade that I caught, what people don't see, and this is something typical of when you're not like seeing everything someone does, you might think, okay, this Victor, he's a genius, right? He caught that move down, and it's moving quickly to the upside. But what you don't see is that I lost 3 trades before I actually I had that trade, right? And this is realistic. This is a realistic trading. It's what you see. Of course, when I see that I lost, isn't that attractive to see? So there isn't a lot like, okay, I'm wrong. When I see and I recognize something that is actually moving a lot, that I like to show. But I like to show the losses too, because it gives a realistic view of how trading actually is. I lost actually 4 trades before because I was looking to go long this level on GU. And it was this movement, which is actually I had a different setup here. When the movement went down and touched the order block that I talked about yesterday, it left this wick on the 1 minute. We're on the 3 minute here. And then had a certain price action that I recognized. That's when I got in. And this is what I showed, but I did not show all the other setups that did not work while I was perhaps quiet in the background. Then I put on another, this is the trade, and I put another entry here, which wasn't that tight. And luckily, and I say luckily, well, it's not luckily perhaps, but it so happened that I have an EA to manage my trades, that helps manage my trade, that in certain times when I need to be away, I have certain targets, I can have that equity based trade manager, babysit my trade for me. The problem is that I used it a day before, right? And I forgot, and that's a human error, and I need to write it down to make sure I don't do it again. But I left that EA with that setting on, and luckily it took me out. The trade that you guys saw yesterday, it took me out at that top. I did not catch this top, but it was the EA that closed the trades. So after this moment, I was still looking to go long because the bigger picture was still valid. And as you can see, I took a number of trades afterwards. This was way after the live stream, and it was the last one that I caught here with a very, very tight area. You can see there are multiple trades in here, and you can see how I got stopped out on 3, and I think maybe 4 or 5 in here before I actually caught the bigger move, which I left overnight, which is not something I do typically, but there is certain amount of, not certain amount, but there are certain setups that, that's the way to trade it. There's no other way because the volatility is contracting and you're not going to have that move until the next day, right? So I left it open, and one of it was taken out by at the rollover swap. I had actually, I think 4, if I'm not mistaken, or actually a few more, and then came the news of today, and it went all the way to it went to my TP basically. Well, actually, it didn't go to my TP. I closed this manually because I saw it went to what I was expecting more or less, and I was looking at the EMAs. What we talked yesterday, if they give me some kind of when the market is sort of topping and it had one last push, but I already took it out before it actually came down. So that is the trade. This is, of course, the news was in my side, and one could say this was perhaps luck because the news went in my way. But when you trade a lot, you will see that what the news will do, a lot of times, price action tend to position itself in that direction. It doesn't happen all the time, but from what I interpret from what happened here is that the price action was setting up for this move that came on with the release of the news. So that is it. And as you can see below here, the profit was $1,414 for that trade from yesterday. Well, it's not one trade, it's multiple trades. And my risk here was $50 per trade. And I had a drawdown of about, let me see, I had drawdown of about 4 or maybe 5 R before I caught the first move, which you guys saw yesterday. So, and this is 28R in profit. And I had a drawdown of about 6, make it 7. So 7 was my risk, my drawdown. My risk was a little bit higher because if you counter all the trades that I had opened, but the drawdown was 7, around 6 or 7, and the net result was 28. And that is actually the metric that we should be using, which is the risk adjusted return. So it's 28 risk, but with a fluctuation or a drawdown of about 6 to 7 R. So about 1 to 4, the trade resulted, if you compare that ratio. Yeah, so that is the trade, and it went very nicely my way. And actually, it's very interesting. We could be looking to see, because there's an opportunity in GU. I will stop sharing to switch over to TradingView, so we can. Let me catch. Let me put my my other screen, because there's actually something very. I think very interesting that I was waiting to happen, and it is happening as we speak.
Before we, I'm sorry to interrupt you, but before we continue on that, I just want to mention something about the giveaways, because I do see that we have in the comments, we have some questions about the giveaways. So first, like the video. If you haven't liked the video, very much appreciate it. I know that I keep repeating liking the video, and honestly, I don't like repeating that, but whenever I say like the video, I actually see live on YouTube analytics that is actually going up, and we're getting more people into the live stream. So yeah, like the video. And when it comes to the giveaway, what we're doing is, I see some discussions here. We're not gonna give away accounts when we have 100 likes. We are going to start giving you guys the opportunity to win accounts whenever we feel like it, which is usually closer to the end of the live stream. And the number of accounts that we give away is based on the number of likes. So if we have 100 like, we're giving away one 20K Bootcamp account. If we have 1,000 likes, we're giving away 10 20K Bootcamp accounts. So now while we're on the subject, if you do have any questions on the giveaway, just let me know in the comments and we'll take care of that. The thing is, we want to make sure that we're giving this opportunity to people that are actually watching the live streams and getting the knowledge from the live stream, and then we want to see that being used in the accounts that you're winning. So we might start sending out the link kind of like in stealth mode during the live stream, so you'll have to actually watch the live stream, so make sure that you're be active in the comments, ask questions, and yeah, that's it. All right, Victor, continue.
Yes, this is what I'm looking at for today. Since I trade EU and GU, both of them are dollar pairs, it's very interesting to look at the dollar index, right? Because this is the basket of dollar against a number of pairs. On the daily, we are in a bearish market structure, right? We're making lower highs and lower lows, right? So I'm looking, what I'm seeing or what I'm expecting is currently we made that move. That's the impulse, that a retrace. This is the impulse, and I would assume, since this is the market so far, market structure. I will assume that this is a retrace as well. So at some point, I'm going to expect that the next move down on the dollar index will happen. I do see that we have come into demand, also on the weekly. So I'm aware of that, but I'll let the market tell me if that is the case or not, because it will confirm me automatically on the lower time frames if I'm right or not. So I'm expecting, or I can see that the market is not done yet with its downward push, right? I could easily see this either from here or for some higher position continue to make that either that double bottom or maybe a higher low, whichever may come through, or whichever will come. We don't know that yet, but I can see we can expect some kind of reversal um, uh, going forward. Okay, if we see that, and we have the pound that is also in a supply area, right? This is the quasi on the bigger time frame. This is a daily quasi, left shoulder, the head, breaking off that neckline, and this is a shallow, but still it is a right shoulder. And actually, since it continued to break, I will consider this as the right shoulder. So actually, what I'm looking for is, and this is this is the bigger picture, right? I'm expecting this move, okay, based on the quasi. If this is right, then going on the dollar index, we should expect the dollar index to continue higher, right? So these two setups, they both cannot be right because they're contradicting each other. But that's fine. I just have to know which one is the one that's going to happen, right? So I will build my case for both of them and let the market tell me which one is more likely, and I'll take the trade. But what I wanted to show was, okay, we have on the higher time frames, we have reason for this area to be a supply zone, and if that is correct, then we can see perhaps in the coming days price going much lower. However, my question is, will this wick or this bar, will this be everything that the market will do to reverse from it? We don't know yet. And from that point of view, I continue. I say, okay, I don't know yet, so I will not try to front run it. I will let the market show those bearish structures on the lower time frames before I start shorting it, right? So if I have at the back of my mind, I want to be I want to recognize that possible short setup that is forming on the higher time frames, the daily and so on. But if we see what do we see on the lower time frames? We don't see any rejection, bearish rejection yet on the H4. To me, I cannot start going short if the lower time frames are not telling me to go short yet. So even though I want to be short, perhaps tomorrow, perhaps Friday, perhaps Monday next week, as of now, I'm still bullish on the lower time frames because these are the structures, the bullish structures that the market is forming, coming back and respecting. So I need to listen to the lower time frames, which are telling me that the market is still positioned as a bullish market. Okay, but now is the good part, what I wanted to show. We had the news. This is this big handle, and if we go to low time frames, we can see the news. That's the news. And what does it typically do? It doesn't always do this, but what does it do? The market moves impulsively and then comes back, retains some structure it created with that impulse before it does the continuation. So actually, even though on the daily I'm aware that there might be a short setup coming up in the coming days, on the lower time frame for today, and perhaps I don't know by tomorrow, but today in any case, I want to go long this area, and these are my arguments. We have the H4 order block, which is still fresh. We have another one which didn't seem to be the one that is reversing price since price went all the way down. So I think this is less relevant. but it's still valid since price was not able to close below it. We go to the lower time frames, we find other order blocks that are, I would have wanted this order block to be within that bigger one, but it is not. And we don't have an H1. This one is already it's not relevant anymore. So this is the movement that I see. You see we going up. Actually, let me take that off. This is the movement. This is how I see through the noise. This is the movement that I see. Right, the market doing this and going up. So there's a consolidation. Right, the market is very bullish because it's coming from below, and instead of making a little top and retrace, it consolidates and slowly grinds up. Right, consolidates in a range, shoots up, and now is coming back into the range for what? This is the retest of the continuation possible. Of course, I don't know what's going to happen, but that's the trade I would like to catch if it forms, and perhaps that could be a great area. This daily order block above us would be a great area that market might go to. If it is going to do that, it will tell us. It's not going to happen just, without leaving traces behind. So let's see if it does that. We have an H4 order block, which is already came into. Let's go to the H2. We do have an H2 order block that is also fresh, although it's not ideal. There is also a bigger one here, a bigger order block, H2, I mean, sorry, but it's not relevant since price it's too wide. It's wider than the H4, so I don't like that. And there is let me see, on the H1, there isn't actually a good area. There is this order block. See that? But it's not fresh. I don't use it. I don't like using it. So I'm still looking for the confirmation on the H1, H2 to let me know, okay, the market is getting ready to turn around. And if it does, right, I'm going to be looking for this. I don't know if I'm going to be able to do that live in front of you, but I will try to see. This is the area. Actually, let me go back to the H4. I'm going to be looking for a reason within this area. Let me mark this with the the template, the H1 template I have for that. So I'm going to be looking for a reason to go long within this area. Okay, that is my playing ground. If the reversal doesn't happen here, bets are off. I'm not going to force it if it's below here. And I want to see a reversal coming either within this area or in any case having some interaction with this area. And I will be looking on the H1, H2 for that reversal. Only if it happens, right? I'm not going to force that. It's not this area. So I'm going to be looking for something, as you guys know me, I'm looking for that quasi. So perhaps something like this might happen, not necessarily exactly. And I'm going to be wanting to see this after a break the neckline, coming back, retrace somewhat, and this would be my entry. And if so, you already know my targets. I'm going to be doing something like this, my stop below either the head or the right shoulder, and targeting that. That's whatever structure I think is more likely to be hit. That's 1 to 7. This is just hypothetical because it hasn't done anything yet. But that is something that I'm looking for, and I think is very interesting because you have that impulsive move from the news, a retracement, and it might have that continuation perhaps today. So that's for me for today.
All right, thank you, Victor. That was awesome. Very nice analysis right there. So for those saying that I'm not interested in the analysis and I keep moving around, my back is killing me. I'm trying to stretch while listening and covering the chats. It's not about me not being interesting, and also I'm looking at my open positions here, and you're just rallying. And when that feeling when you're like looking at your unrealized profit and loss, and then everything else kind of like you zoom out, and everything else kind of disappears, and you're like, yes, this.
Yeah, sure.
This is
I have that. Sure.
Yeah. That's the cool thing about trading. You know, when you get into that flow, you said at the beginning of the live stream, you're in a flow, and that word to me, you know, hearing someone say that, hearing a experienced trader say that they're in the flow, I get happy. You know, I that puts a smile to my face because I know what that means. That means that you're in just a relaxed, you know, like a generally relaxed way of being, and trading is just effortlessly, you know, you're just going in and out of the markets without really having to put a lot of effort in it, you know.
Yep.
It's a wonderful wonderful feeling.
And you're getting the when you're in the flow, you get the feeling, and that's a good part of it. You get the feedback from the market, from your process,
Yeah,
that you're doing things right. When you go for a run and you've been in a flow all day, your run will be better. If you're
yeah,
doing sports
exactly.
or if you're doing whatever, everything will seem to be enhanced. And that's the, I don't know, that's the higher level of living, I suppose, right? When you're doing things
Definitely.
and things are flowing, your quality, you're enjoying things, and everything flows, or most of things flow nicely. That's the good, that's the good mm, space you want to be in as much as possible.
Yeah, I mean, getting to that flow state of mind, I think that's whatever field you're in, if you're in trading or engineering or whatever work you're doing, like to get into that flow state of mind, that's going to be that's the goal, right? And of course, we also have to understand that we're not always going to be able to be in that flow state of mind or tap into the what, you know, Mark Douglas talks about the opportunity flow, right? Here, you know, you tap into the opportunity flow of the market. You're not always going to be able to do that, and I think it's very important to understand when you're not in the flow and when you are in the flow. Because when you're in a flow and everything's going well, like you want to make sure that you keep going, but also at the same time you want to be mindful of what's going on, because that flow state of mind, the feelings that you're feeling, you want to make sure that it doesn't translate into too much positivity. Because when you're too positive, when it's too much positivity, you might become overconfident, and then all of a sudden what started with a nice flow is now costing you a drawdown. And that shift in mentality, it's almost depressing. You know, you're up here, you're almost euphoric, and then all of a sudden you're like, wait, what happened? You know, now I'm all down here. So gotta be managing those emotions. Use the
Yeah,
CAD.
it's important for when you're in the flow to not overshoot, because in the
Yeah,
flow is not
yeah,
being, ecstatic. That's not in the flow. In the
yeah.
flow is
Because
when things are going effortless, and flow,
yeah, and
it says you're flowing, and like everything is efficient, and it goes automatically. You don't have to force things. uh
yeah,
that's different from being ecstatic and, extremely happy. Usually those are too emotional kind of situations. And too much emotion is not good for, your thinking process.
definitely. So I made a trade on USD CAD. Now I wanted to show you guys this because it's such a picture perfect. In many ways, I think this is a very good. I'm not going to say it's a good trade. In many ways, it's good looking price action. It's price action that when I see this type of price action, it's just something that just I get all warm inside. You know, you see a high time frame level, you see reaction to high time frame level. It's confluent with the right fibs. You get the horizontal level, and then you see like you get this nice low right here, and it kind of like that bullish candle right there that kind of goes above the level. When you close that daily candle, I mean, one would say that, yeah, this is now a really good reaction to that high time frame level. And then you go into the 4 hour and you see that right after the close of that daily candle, you have a retest of that breakout level. So I mean, there's different ways you can trade this. But if I would be more active now, I am quite active in trading, but I'm more zoomed out, and I like to, I don't really like, I'm working about 8 hours every day, but I'm not trading 8 hours every day. And I like to be more efficient with my trading. So I like to maybe trade 1 or 2 hours. And then while the trade is running, while, the market is doing its sitting, I'm focusing on other things. So if I would be more active, I would be looking at this and I would be waiting for this confirmation. And I would be, first of all, I would like wait for that 4 hour candle. And then I would wait for a nice, confirmation down at the breakout level. And we get something really nice here. We get a 4 hour, 4 hour bullish pin bar right here. And I think to me, this would have been a good entry if I would be more of an active trader. So that trade would have been a 4R. Going back to the trade that I actually have open is 3R. So it's a difference between 3R and 4R. But then you have to ask yourself, which is better? Which way of trading is better? Because I'm making one more R on this trade than the swing trade. I can move that over here. But the thing is, the tighter your stop loss is, the bigger the chance of you getting stopped out. The bigger the chance, like the wider your stop loss is, the more room for error. So that's one thing I would say. If you have a tight stop loss, there's more room for errors. So that 3R long term might not actually translate to more money. Maybe having 4R might not be more money. Having a trade that's 3R, but having a wider stop loss with more room for error might actually translate to more money long term, because a lot of times market move quite erratically and you're going to get big moves to the upside and downside. But looking at that trade, I think it's a picture perfect entry right there on the 4 hour. It's a very, very nice break and retest off that level. Now I know that I'm currently using, looking at the I'm currently applying the set and forget approach. However, I think that's also one of the reasons why I yesterday talked about how I'm perhaps going on tilt, is the fact that I'm it's very difficult for me to stick with the set and forget. I'm really feeling like I need to be more active. And that's just a feeling. I haven't confirmed it with the statistics yet. I will wait till the end of the month. So the first weekend after the end of this month, I will go through April and May data, and I will see every single trade. I think it's about 50 or 60 trades. I'll take a look at every trade. Would I have been more profitable moving my stops more actively? Would I be more profitable with a more active trade management solution? And that the result of that testing will determine how I trade next month. And I think that's what trading is all about. Trial and error. You do what works, you stop doing what's not working. But there's also another component to the set and forget, and that is the mental component. Because the more active you are in trading, the more problems you're going to do, the more mistakes you're going to have. If you can trade and just have very low volume of trade management, then chances are that you'll make less mistakes. So the way it's very difficult for me to look at the data and say that, okay, so set and forget is not as profitable as active risk management. But then all of a sudden, I let's say next month comes along and I'll start being more active at the trade management, and then at the end of that month, I'm gonna write something like, 25% of my trade management is efficient, and the rest is just impulsive trading. So it's very difficult for me to I need to be very careful when I do start to be more active with the trade management again, which I do suspect I'm going to be. I need to understand what are good risk management and what is just impulsive actions. Did you understand what I'm saying, Victor?
Yes, no, of course. It's crucial. I think because that's the importance of having a trade plan and knowing what you're supposed to be doing, because we can do a lot of things and it can have all sorts of results. You can trade badly, or mismanage in terms of not following your trade plan, having deviation that should not be, wrong deviations from your trade plan, and having good results for a period of time. And it might trick you into thinking, okay, this is how I should be continue going forward. While the data on a longer term, and a month is good, it depends on how many trades you have, but it's also good if you have that possibility to look. If, let's say, this month you have a better month, and you're doing certain things that and you think, okay, this needs to be part of my trade plan going forward. If it is possible, try applying that to not only last month but also the previous months. If it is something that is going to be profitable, more profitable than before, you should be able to see that, if that is possible, in your trading, in your data. Because 1 month it depends on your how many trades that it is. But 1 month may be, maybe one fluctuation, but it's good to have a longer term, the sample size as big as possible, so you can be a little bit more confident in the conclusions you draw. But yeah, changing in itself doesn't mean it's better, even if you're getting more R, because it can be fluctuations. A profitable system can have periods where it's not making profit, and unprofitable system will have periods where they are profitable. So only looking at a certain period and thinking, okay, these changes are better, is a little tricky.
What would you say? How many? We talk about numbers, and when we talk when we talk about analyzing, just give me a second. I got a message from Saul. Gotta see. He's asking me for a link to join the live stream. So let's just give him that invite. All right, you heard it here first. Saul is coming. Let's hide all your bad trades. Reset your trading view history. Saul is coming. All right, here we go. So, we clear the cookies, hide the cookies, hide the cookies. Yeah, no. So I think we talk about numbers. We talk about analyzing data and statistics, and sometimes sometimes people talk about backtesting and journaling like it's optional. Like I don't get that. I really do not understand that. Are you really a trader if you're not journaling, not backtesting, not gathering statistics? Like, it's weird to me. It's weird that it's weird to me that you have professional traders talking in a way where it's like, I don't journal. Like, what do you mean you don't journal? Like, you don't even have you journal? All right, we got the big boss, the big boss Saul, the one and only. What's up, Saul?
Hey guys.
I think your mic is got the wrong mic again.
Let me fix that.
Every time. It's been so long. It's been so long that you forgot to put the right mic on. Now that we do have Saul here, let us know if you do have any questions to Saul. Maybe you want him to share his secret, exclusive trading strategy.
How's now? How's the sound?
Yeah, much better.
How
are you
doing? Too
doing?
many people watching. They're gonna stop moving the markets if we tell them about that secret strategy.
I'm already flat in the market, so they miss the trade. Victor, how are you? Jonatan, I mean, it's been what, 1 month or probably more?
It's been a while. Yeah, it's been
a while, huh?
Yeah, it's been a while. Very, very excited to have you on here. And OS says excited for tomorrow's Discord session with Saul. Yeah, he's going to be in the Discord with Abe. So make sure if you're a Discord member, you join that one as well. The best scalper on. Yeah, I think I have to agree that Saul is definitely good when it comes to scalping. I like having him on because when you're on and you're trading live, it's like you're so focused, you know. Like I can see it in your face, like you're so focused, and it's I think that's
But at the
also
same
why.
time, you're very relaxed when I see you trade. Focused, but still relaxed.
Yeah,
Yeah, I think it comes with time, but I don't think people realize how complicated it is to do these sessions. You know, reading all the comments and talking and and trading and managing the trades. But yeah, an applause for each one of you guys to doing this.
yeah, it's not easy. Live trading is difficult, especially when especially if you're scalping and you're looking at trade and like you look at the tick by tick and have to explain what you're thinking, and then all of a sudden you're like, the trade is over. Okay, so go to the next one.
Yeah, absolutely.
So,
It's not
are you looking at anything? I know you're quite busy around the office. Lots of products going on. So probably not
Yeah,
a lot of-
we're actually quite busy with all the everything what's going on in the company. You know, we're about to do a very large migration. You know, from just a technology migration from old code to new code and infrastructure, technology infrastructure. So it's going to be really going to allow us to do a lot of things that we currently don't do. So that's exciting, and we're also in the final phases of our own platform solution, out there. So instead of being only relying on third-party suppliers such as MatchTrade or MetaQuotes or all of that, we also going to have our own internal solution. So it's going to be pretty cool to have that in place, but it's it's very challenging to build a trading platform. Of course,
Yeah.
you outsource a lot of the solution. The interface, for example, we're bringing from an outsider supplier. We got the interface, but all the engine and all the servers and everything that makes trading happen, it's actually ours. And it's a quite a project. So we're also testing that and all the implementation and all automations. But yeah, we're working hard on that.
Yeah, I mean that there's a lot of things that goes on in the back end of a trading platform. So yeah, it's and then you have to like connect all the accounts and everything. It's
It's exciting time to have our own platform. That's gonna be something. I mean, not relying on third parties.
Yeah, of course, third parties such as MetaQuote. I don't think this is not to compete with these platforms. It's only to have our traders an extra alternative. But then you realize how it's not an easy task, right? To build your own platform. But yeah, we're working on that, and of course, you guys will be one of the first guys to put hands on the platform and get it, try it, and test it. And
nice.
yeah, but yeah,
of course.
It's going to. Yeah, we have a few more weeks till then. So meantime, we keep working with what we got.
We actually had a really good question in the comments here that I wanted to ask you. It's about why did you choose scalping instead of intraday or swing trading? I think maybe if before you answer that, I think I think it's not about we choosing a style; it's more of the style choosing us, right?
The style, you mean, not a strategy, but a style.
Well, yeah. I mean, the style when it comes to like the approach, day trading, scalping, or swing trading. Basically, the question is why are you scalping? Why are you not more of a intraday trader or a swing trader?
Yeah, the truth is, I really struggle with letting my wins run. Right, I'm very impatient when it comes to trading. I know, and I realize scalping is probably the least effective way of trading. You pay more commissions and you pay more spreads, and you work harder in order to accomplish the same results that you could accomplish easily if you were swinging. But it's just a way that accommodates my personality. I really, I remember back in the day when I was trading based on the dailies, and I would leave my trades open for days and weeks. I would have a hard time to go to sleep, for example, or I would wake up in the middle of the night just to take just to check my phone, the trade, to see how everything was going. Of course, if it was a losing position, that was catastrophic for my sleep. So I said, okay, this is not worth, right? I would be destroyed the next day because of bad sleeping. So I needed to slowly tune what I was doing into something that made sense to my own personality and my lifestyle and my risk and everything. And slowly I understood that I needed to scalp, just so I can, start a trading session and end the trading session, and that's it. Then I can
I mean, it's incredible that, and by the way, guys, if you like having Saul on here, hit that like, make sure that he knows that you want him to come on more often and show how he's scalping. It's really, really cool stuff when he's live trading. For those of you who have watched it, it's usually very insightful episodes. But yeah, you said something very interesting there where it's like, you talked about sleep, and same with Alex. I could talk about swing trading with Alex, and he's like, yeah, I can't sleep if I have a position open. And I'm the complete opposite. Like, if I'm scalping, I can't sleep because I'm just it's too stressful for me to scalp. So it affects my whole day, like it's too many trades, it's too many decisions taken in a day. And when I go to sleep, I have it takes me too long to kind of wind down, so I have to go to sleep like almost like 1.5 hours before I'm supposed to be sleeping, and kind of read a book to kind of calm down. But when I'm scalping, I'm like, you know what, I'm making money. I'm making money in my sleep. It's a much more, for me at least, a much more relaxed way of trading. And I like the fact that I can be, I like the fact that I can be in a position overnight. I actually do prefer that, because there's something I've became, I like, because I go to sleep and I'm like, it's gonna be so nice to wake up and see what my position has done. I'm looking forward to waking up, and I try not to pick up my phone the first thing I do, but we all do that, I'm not kidding. Pick up the phone, I'm like, trading view. So your USD. Yes, TP hits. It's
that was me this morning. I mean, I left. I don't leave my trades overnight, and I left that position, and I had quite a few trades. So, and the first thing actually during the night, I slept. I dreamt about the trade. I mean, literally. I dreamt that I had I was in profit, and then again that I didn't. I woke up and I said, the trade is still open, but then I realized it was a dream. That's how I don't like having trades overnight, but I know they can be profitable, so I need to do that.
Absolutely, I think catching a good run, a good impulse, on the dailies or whatever. That's the most profitable thing you can do. But
yes,
it's just and you know what? I do have long-term investments. I have stocks, but I'm not. I just invest long-term, not leveraged, and I don't suffer with that because I know how much is at risk, and that's it. But when it comes to trading, I don't know. I just struggle trading on on the larger time frames and going to sleep, and I'm just instead of going with the kids or working, you're just looking at your trades, and you want to go in there and interfere with the trade, and it's so easy to manually interfere with the movement or the run you were looking to get, the whole movement. So I don't know. I just made peace with the idea that I need to scalp, overcome the obstacles of scalping, which is not an easy task, and it's just what works for me. I know I'm not the most profitable trader in the world. I know with less efforts, swing traders accomplish the same that I accomplish with a lot of work. But that's just what works for me.
What I like about scalping or intraday in general, and I think this is what you're referring to, is that I have difficulty detaching myself from an open trade, right?
Yeah.
If it's trade, if the trade is open, I want to be watching it. I want to be invested in it. I want to be focused on it. Even if I'm following a set and forget management, I want to be there. So having trades longer than one day, having trades overnight, doesn't go well with that difficulty of difficulty in detaching yourself. And I think scalping and intraday is perfect because once I close the day, I can completely forget everything about trading, and I can go
Absolutely.
about do something else in my life and not think even 1 second about the trade because it's done. And while the trade is still open, I have that thing that I need. I have that, urge to see and watch and think, did I do everything right? Did I consider this? Overthinking things.
Absolutely.
And the ability of detaching is the best, I think, for intraday trades, which scalping is one of them. So I that's what I like, and that's why I do intraday. I know it costs a lot more time, and it's not as efficient as you said, correctly so, but it's what works for me as well. So I completely agree with how you see that, Saul.
Good to hear
Yeah, I think
I'm not alone, Victor.
yeah, I can understand that you're, when you're done with the trading session, you kind of you can relax, but I can't really relax unless I'm in a position, which is weird. Like I need to be in a position. If I'm not in a position, I need to look for a trade, which therefore swing trading fits me well because I can enter a trade and I can be in there for, I think my average holding time is 2 to 3 days. So for me, it's like I enter a position and then I know like, okay, I've got my fix for the next 2 days, and in 2 days I'll need to look for a new one, kind of. All right, we got a question. How you discipline yourself from managing risk in on single setup while scalping? Yeah, this is a good one. It says like for me, it's hard to cut losses and position sizing when scalping. I think cutting losses when scalping is I think that's quite important, right?
Yeah, absolutely. Even if it doesn't matter what you're doing, you need to know how to cut your losses. I think what scalping allows you, or at least the way I approach trading and trade management, is the fact that you can quickly get in and out of the market, and very quickly understand, okay, this trade is not going in the right direction. I need to close it, and I need to take partial losses, and I need to take care of the overall portfolio. That when you're trying to look for a long-term setup, maybe you're in a consolidation, and it might take days or hours in order for the trade to give you a positive signal or a false signal, and you're just seeing the market just consolidating. When it's scalping, usually you understand, okay, this is going in the right direction or in the wrong direction. I need to close it or add it or whatever it is, but you get that feedback faster. So that helps with the trade management.
We have another question here. Yeah, what pairs do you usually trade when you're scalping?
For me, my bread and butter, that's Euro USD. Although there's some times that and lately has been that if the volume or the volatility is not there, then I will look for, let's say, pound dollar. And this morning there was the CPI in
Yes.
in the UK, so there was a very a strong movement in the pound. I counter trade that movement turned out well, but I go where the volatility is. So I'm just very, very familiar with the Euro USD. I can say that I have mastered the Euro USD, so that would be my default option. But I'm not married with it. So if there's no setup there, if there's no enough volume or volatility there, then I'll go for gold, pound, whatever it's moving.
So we talked about we have someone talk. Yeah, exactly that question. Tell me your most profitable time frame. So I can start and I can say that it's not about, for me, it's not about one time frame. I'm not profitable on one time frame. I'm trading anything between the weekly and the 5 minute basically. So for me, it's not about one time frame. It's about the overall structure. However, I would say that I'm mostly looking at the 4 hour. But what about you, Victor?
I don't have a specific. I have time frames. I see them as they have different uses, right? The higher time frame
Yeah.
for anything above 4 hour to me is panoramic. It's it's the scenery. It's where kind of environment are we in. So I can look for setups there and I trade them, but I because of the lower time frames and the frequency the setups come in the lower time frames, I typically start with the H4 and I don't do top down. So there's no one single time frame that is more important than the other one. Just have to recognize the hierarchy of each, right? H4 being more important and more stronger than H1, but I need both of them to be in confluence for me to start going and taking that trade. But when I execute, when I entry, I need to go to the minutes, all the way to the 1 minute, 2 minute, 3 minutes, etc. So I need all of them. I can exclude I don't use infinite number of time frames, but I need from the higher time frames, from the hourlies and the minutes, I need them because they serve different purposes. So it's I think it's a little bit different than that. It's not one fixed time frame and that's it, but I have to have contacts. I trade setups within a setup. So on the higher time frame, I have a setup, but I'm going to look for that smaller time frame setup to get my entry and so on. So it's a bit more complicated than just one time frame to say.
And for Saul, I remember we talked about this in a last stream back. Then you started talking about the tick chart, and I'm like, oh no. So basically, the tick chart, that's like the 1 second chart in TradingView.
Yeah, not even that. The tick chart is just it's a timeless chart.
It's every tick when price moves from
every tick. Because if we think about it, the market is timeless. I get an invoice, I pay for the invoice. I don't look at the close of the 5-minute chart in order to pay the invoice I need to pay. I just pay it whenever I pay it. So the large numbers that are moving at the market, they're not looking at the time to see if they go and pay the invoice they need to pay or to move the money they need to move. They just do it. So really the market doesn't care about time frames. The time frames we get, they're just arbitrary and they're given by the brokers or the platforms. The market doesn't behave in time frames. Of course, once we have that representation, because of the retail literacy and education and traders will look at the time frames, then we tend to think that time frames give you different information. But price is price. Doesn't matter in which time frame you're looking at. But when it comes to to how to approach and how to use the time frames, so I relate to what Victor said, that I look at the dailies to see where's the big money, where's the big trend, or what's happening like an outlook perspective, and then I go to lower time frames to try to get a more precise entry point and a more precise stop loss and take profit and so on. But just always keeping in mind that the time frame is just a arbitrary representation of the ticks coming in and out of the markets, because and that's why if I could on MetaTrader go and trade straight from the tick chart, I would, because I care about price. I don't care about time.
Yeah, that's interesting, and it's the same. For me, it's the same actually as a swing trader. It's the same for me though. That I think we all look at price. We don't really think too much about time. We basically look at price action and we try to determine what is the current price movement telling us about the potential direction of where it's going. Like what is every candle, or in your case then when you talk about ticks, what is every tick movement telling us about the buyers and sellers in the market. And when you look at a tick chart, for example, if you see that you have a steep move to the downside and then it starts halting and then starts ticking up and you're getting momentum to the upside, that there's now buyers coming into the market, and buyers are starting to take control over this market, and that's where you probably want to enter a scalp for just a couple of pips, get in and get out quickly. While me as a swing trader, I'm looking at it from the same direction, but I'm just willing to have a much bigger room for error, basically.
Absolutely.
For your USD, what's your TP targets in pips? For me at least, I never really think about pips. I look at levels, and I'm just looking at one level, and I'm asking myself, what's the probability of this level being used as support, and if it is support, where's the resistance? But I know that when you're trading, you're talking about pips, right? And you're saying like, oh, this is a 10 pip. I'm just looking for 5 pips or 10 pips or whatever.
Yeah, for example, on Euro USD, it really depends on the time frame you're looking. But there's this concept called price action, price cycle. Okay, so from key level, what you're referring, Jonatan, from key level to key level, what's the average amount of pips between those key levels? So if you look at the Euro USD, for example, on the 1 minute chart, you will see like from pivot point to pivot point, or from key level to key level, there's an average of, I don't know, 6 pips. So that's if you really trading from key level to key level on the 1 minute chart, and then you backtest your stats and your results, you will find out that should be your average take profit. So what I try to do is I'm not always aiming for the full impulse, because it's very hard to get the very bottom of the range and get out at the very top. So I try to get, I don't know, a third or half of that impulse. So like my default pip target on Euro USD on a 1 minute chart, it's like 3 pips, but then I adjust it up and down depending on what's the volatility or the volume in that moment, in that current scenario, and I adjust it from key level to key level, and it tends to be like 4 or 5 pips, because that's the distance between key levels.
If you have the time, if you want, maybe you could pull up your screen and just take a quick look at EU. And there's a question here as well. Do you use any indicators?
No, I don't. Am I sharing now?
Yeah, got it right here.
Yeah. So no, I don't use indicators. Most of the retail indicators, they use past information to give you certain averages. So with some practice, you kind of get an idea of what the indicator is going to show you. So a lot. If you use, I don't know, SMAs enough, then you can remove the SMA, and to have an idea, if you would put the SMA on, where would it be? So I don't feel today the need of using indicators. But back at the beginning, it was useful to use some. So in the morning, I was fading this movement right here. So my trade for today was actually the downside of this impulse after the news. I saw there was no enough confirmation, so I took some short trades over there, and actually when I trade based on supply and demand, that the news that was a good demand, that was break to the downside, and then went back up. So all this area is called like a swap area. So it was, once it was break to the downside, it was supposed to work as supply or as resistance, and once that was break again to the upside, now this should be working as a demand or a support area. So I have like mixed bias kind of for the current session, but I would say I would be looking for some more longs. Okay, I would be looking for a pullback towards this area, and then I would be looking for a long position, just some scalps. But I think this is the kind of day that doesn't matter what direction you choose, you end up either losing money or making money. So I wouldn't be very concerned about the direction into this session. I just need like volatility to be there. By the way, this is pound dollar. So I would either let this go a little bit lower. Maybe I would start like at this level, and then I would feel comfortable building long positions. And if this continues going to the upside, then I'll feel comfortable going short as well. So I don't think there's going to be, after the long push and the full retracement, I think this will be the range for today. I don't think we're going to break this level and that level. So I think we're going to be there. So around this level, you can do a lot of things. Unless, after the US market open, there's going to be a spike in volatility or something like that. But as long as we stay with current volatility, quiet volatility, I think we can make money both sides. So maybe I'll start, if we go a bit lower, I'll start building some longs. If we continue higher, I'll start building some shorts.
Right. So we're looking at pound dollar here. Where would you be looking to short?
So I needed to come to the top side, and then I would go back, let's say, to these levels back here. Let me zoom in a little bit. So, we have this resistance level right where it's right now. We have that one. So that would be a first entry. And then we have a strong selling area back here. That would be my next valid entry point. And then all the way back here. So those would be the levels I would be looking to short. Something like that.
All right, yeah. Every time I'm watching and doing your analysis, I always go in and I look at my screen and look at the same time frame, and I'm seeing the same levels. I'm like, maybe it's time to open a position. Maybe I should take a scalp here, but it's like, nah, not gonna do it. I'm not gonna do it. I know how that ends. I'm gonna be sitting here tonight just scalping, blowing my account.
No, don't scalp. Don't do it. Yeah, don't follow. Don't follow along, please, guys. And the only thing is we just need the price to move. That's important, because if it stays, just without volume in there, volatility, then you get trapped in the position. No way to get out of it. But if we start to have some nice movements, then we'll try to catch some pips.
We had a question here. Do you all use stop loss? Like for me, of course, I need to use a stop loss. I'm swing trading. If I first of all, you should always have a stop loss, of course, and with some of the programs, you are mandated to have a stop loss. So for me to not have a stop loss is I could just give away the account. If I'm going to stop using a stop loss. But when you're trading, when you're scalping and you're very active, I think it is always good to have a stop loss, but you can also you always have a mental stop loss. You know where it's like you enter a trade and then I'm gonna exit if it goes below this low. I'm gonna take profit if it hits this level with the reactions. I think, but that depends on the program as well. You right?
Absolutely. I mean, for my personal trading, I divide it into hard stops and soft stops. Okay, so for example, if I'm going to be shorting, I said, okay, I will be short my valid setup. Like there's an argument to go short as long as we stay below this level here, this extreme level. So as long as we stay there, I might use mental stops above this level and this level. But once we break this level right there, that's a hard stop. All my stop loss will be there, because if we break strongly this level, we might go straight to the next key level, which is very far away. So between this level and this level and this level, I will use my mental stops, my soft losses, my soft stops, and I'll be managing those manually. But once we break what makes the whole setup to break apart, I'll just close everything the hard way, and I'll use the stop losses orders, in place.
Yeah, so we have a good question here for all three of us. It's from, so we got, where is it? I can't, yeah, here it is. Yeah, so basically, how do we overcome drawdown in a losing streak? And what position sizing do you use? What is your risk to reward? I think we can cover position sizing and risk to reward ratio. Would be maybe a bit too advanced going into the statistics, but we can talk about how to overcome a drawdown in a losing week or losing streak. So maybe Saul, do you have any advice to we got some traders on here who I know they've just opened a evaluation account. They're super happy to get started, or maybe like we've seen, like I'm sure you see a lot of swell people get funded, and then right when they're funded, it's like the drawdown starts.
I'll let you know what I see a lot of accounts, and you see there's like two types of traders. There's the traders that were in drawdown. They try to get out of the drawdown by increasing lot size and increasing leverage, and those guys most likely tend to end up losing the account. They make the drawdown larger faster. And there's another kind of traders that they decrease size when trying to recover from a drawdown, and those traders have a higher chance of recovering the drawdown. So actually reducing risk and reducing size help traders to overcome the drawdown, in comparison to those who try to make it the fast way and increasing risk. So that's what I can tell you from watching thousands of accounts.
Yeah, and also I think, and because of the fact that using a lower position size and kind of like slowing down helps you get out of the drawdown. Maybe it would be wise to, when you get your funded account, you want to reduce that. You want to reduce your risk right away. You want to make sure that, because like there's a very big chance that people that just got funded, they will enter a drawdown. They will enter a drawdown. A lot of times that happens. So if you start out with lower risk, that drawdown is not going to be as extreme. Because I've done that mistake myself. I'm on a certain risk in valuation, then I get the account and I continue on the same risk. But because I got funded, I'm happy about getting funded. It's like the drawdown just starts, and I realize too late that I'm supposed to be cutting risk. So it takes a long time to get back, basically.
Absolutely.
Yeah, we have a stream we did a couple of I think 2 or 3 weeks ago about position sizing, about risk management, and that is exactly that insightful information you gave the viewers. So is exactly what we were discussing about how you should be risking less if you have less available drawdown, because that's you're decreasing your risk to ruin, which is actually what happens when you blow your account or you reach your max loss. So it's very important, guys, for everyone who's seeing. You're hearing it from the CEO himself telling us what the experience is, what is most likely to keep your account alive. It is risking less when you're going into drawdown, not risking more.
What
Very
is
important stuff.
What is the possibility, Saul, of sharing, like getting some statistics together on, like on the overall, like for example, I don't know if it's even possible, but things like the percentage of people that like get a funded account and trade it till the first payout, or things like that. What's the average holding time of the most profitable trader? Things like that. Is it possible? Is it even possible to get that type of statistics from the back end?
From the data we can get everything. We just need to know, what questions we want to get answered. But I can tell you this.
I think that would be very interesting. Maybe we could ask the audience if it's something that they would like to know as well, because I would be very interested in seeing like what's the average holding time of the most profitable traders.
Yeah.
And maybe, how much are they risking, things like that.
Yeah, I can tell you, I can't remember, and I haven't checked those numbers lately, but I can tell you that the guys managing the most money for the company, the largest accounts, they're not scalping. They're holding the trades for longer. They're holding for hours, some of them for days, and actually they're using small leverage. Counterintuitive, but those using or trying to use high leverage, many of them manage to get a payout, but they don't manage to get, to stay consistent or for the long term. So those who manage to to withdraw every 2 days, every 2 weeks, every two months, and you see them just withdrawing for years now, are using less than 1 to 30 leverage, and most of them are not scalping, are doing some swing trading.
Yeah, I think that's what I see as well when I talk to like some of the big guys. They're always like, they're all like, you won't see a lot of them be like super focused and scalping, but I do know a couple of big traders that are scalping, and they're doing it in a way where it's almost magical. I mean, when you're swing trading, you're kind of like looking at a level, and you're looking at a trend, and you're saying like, I think this is gonna move here. Maybe you're trading on some fundamentals. But when you're like scalping with big size, and you're doing it, consistently being profitable scalping with big size and doing everything, same thing day in and day out, that's something different. Like when I see that live, it's like almost magic. Like it's just insane. It's just crazy. So it does require a special type of trader to be scalping at those levels for sure.
Yes, not easy task. Absolutely.
Yeah.
So there's a viewer asking us if there is going to be a live session in Spanish. Someone from Chile.
I think you know Spanish, don't you, Victor? Maybe you can run that.
Yeah, I'm not going to be there. I can take care of the comments though.
Victor, is that right? You know some Spanish?
Yes, I can. I speak Spanish.
Yeah, so let's do it.
All right. So you.
I'm just not sure how many audience is there for the Spanish, for a Spanish stream. But if there's enough demand and viewers, yeah, let's do it.
Yeah, the same goes for me. If there's demand for it, I'm up for it. My Spanish is just about as good or bad, depending on what your opinion is, as my English.
So you're good.
So I'll get a Spanish book.
There has to be. I'm sure, Jonatan, there has to be any IA solution for you just speaking English.
That would be amazing.
And then that would translate you.
I'm gonna open a tab. I'm gonna Google AI automatic translation. Yeah, I'm gonna look that up. That would be fun.
Yeah. So guys, I want to walk you through what's going on right now. Okay.
Yeah.
Because I was building on the resistance to hold and to have a movement to the downside. I've made the money for the day, I believe. So I'm fine just risking a little bit of capital to trade during the session. And when I was at this point, I said, okay, there's two possibilities. We either break to the upside, and then I have to either take the loss, which I could take the loss right now and take the small loss, keep it small, and we're good. Or if I feel I'm not over leveraged right now, I can wait for the next valid entry selling area, and then I can add to this position. To be honest, this looks like I should close it and take the loss, but I'll just I'll flow with this to see where this takes us, and maybe to try to manage the myself out of the loss. But when we were at this point, there's nothing telling you, okay, this is going to break and continue. How many times have you been in the position where you are at their resistance, try to catch the breakout to the upside, you buy, and then you get faked out? So, the chances for this to break to the upside or to reverse and go in my direction, really was like a 50-50. Okay, and I need to have that, in mind, that I'm selling here, and very likely this can go to against me. So now what I do with this, okay? Should I close the trade? Should I try to fix it? And this is what I'm going to try to do right now. So my mental stop, okay, is right now. Okay, I should be taking the loss if I was over heavier in the trade. I'll try to use my next valid entry point, which is this supply here, to try to fix this movement and potentially make some money. And if not, I think I'll close that setup, okay, if we break strongly to the above this area. So I'll try to manage myself out of the trade, and I'll see how that goes. So what I'm looking now is just the market to slow down, okay, the same way that did here, back here, around this area, and I'll add some more trades. And if that breaks or the momentum continues to build to the upside, then I'll also have to take the loss. So that's what I'm going to do.
Yes, you basically looked at selling that first resistance area.
Yeah. So that failed. So a very valid thing to do would have, to take the loss, to keep it, 5 pip loss, 6 pip loss, and then you look for the next entry point. Because I enter very small, then I'll see if this slows down and it makes a retracement or something, and I will use that retracement to try to fix this trade here, and hopefully to show the flexibility that gives you to to scale into a setup.
We have a question about not using a stop loss. What if it spikes? That I guess that is a risk. That's always a risk. That's why I do recommend people to have a hard stop in. Like if price does but there's two sides of that. You put in the stop loss, it spikes, takes out your stop loss, and it ends up with a wick. So that's also a very real possibility. But I do recommend that. So first of all, like when we're watching Saul break this down and trade live here for us and explain this. I don't recommend people trade like this, okay? So you have to understand, like it's years worth of knowledge and experience that has created this, into the way of scalping. But you have to also understand that if you're new in trading, this is several years probably in the future being able to trade like this, and especially without a stop loss. Because if you're totally new and you're doing this, chances are that if you get that spike, you'll panic, and you kind of have that deer in the headlight moment, right? And you see price run and run and run, and all of a sudden you're blown the account. Which happens. I get messages like almost every day with people like, I blew the account on FOMC, I blew the account on this inflation data. I'm like, why? That shouldn't be possible. Like that should not be possible. First of all, you shouldn't be in trade during that time. You should have a stop loss that tells you that, but yeah, so it's gotta be careful out there. What are you thinking? Are you looking at any fundamentals at all when you're trading? Do you have any like fundamental ideas in the back of your head when you're watching the markets?
Like not really. I have the fundamentals like to kind of make sense of the overall direction I'm taking, if there's any relationship, and I just want to make sure I'm not trading around news, high impact news, because that will completely change market behavior. But other than that, I don't really look at the I don't really look at the fundamentals.
Yeah. Let's see. I had what about US traders? What's going on with that? Do you have any updates?
Yeah, the legal team is working very hard, and we're keen to allow them to come back. But until we don't have the certainty and the green light from the legal team and our partners in the US, the legal team in the US, we can make that. But we're doing some progress, so it's not that we have closed that option, but it's not something like available right now. If it's going to happen, this process, the legal process, is so frustrating because they take so long. But the option is still on the table. Okay.
And it's frustrating when it's like out of our hands. It's not really. We can't.
Yeah. Guys, so I just want to tell you what I'm thinking. Okay, this kind of behavior. I'll zoom in a little bit. That's what I was kind of looking for. Okay, to a little bit of slowing down. We have a strong movement to the upside, and then smaller candles and a little bit of tails in the top. So that's the slowing momentum I was looking for. But now this candle is very important because I don't want, after the potential slowing down in the market, to have a new spike of volatility to the upside. Okay, so that's when I start. Okay, should I add more? Should I just cut this entry right now, for example? Should I cut it? Because the idea that I have that this could be potentially slowing down was invalidated. So I take that partial loss, and then if I have a new valid entry signal, then I'll short again. Okay, regardless of that previous entry signal. We're right at the area where I want to see markets slowing down and not breaking through. So if that breaks through, I'll have to take the loss. If it starts slowing down, then I'll build the short position. And just I want to ask you, Jonatan and Victor, okay? I want to hide my entry levels, okay? If you're just opening the charts and this is what you see, the market at the very top of this this movement right here, your very next trade, would you take a long right here, or would you try to build a short position? And just answer honestly.
It depends on whether what's happening on the higher time frame, because if I only have this information, I would think I want to be shorting, because this move seems to be like extended. It hasn't had any retraces, so I would naturally assume that it's going to revert to some kind of mean, and it's kind of extended, I think, just looking at the 1 minute chart. But it also depends on the higher time frame to see, why is it doing this? Is there a higher time frame reason why it's making this? Why? And if so, how much more should it go according to that higher time frame setup? But with only this information, I would short this.
Okay, and I'm with you. I'm sorry, Jonatan.
So the current 1 minute candle, if that's going to close bearishly, I'd look for a short if I had to short. But I wouldn't short this. I would rather go long at the level below. So I would rather go long at like 27,340.
Correct. So you would wait for this to pull back and then to go long, right?
Yeah.
But either way, the very next position right here, like for me, buying here doesn't make sense at all, right?
No, not at all. Not at all.
So I'm keying on that short trade or that pullback in order to allow me to fix this trade. You know what I mean?
Yeah.
So that's all I'm looking for. So it doesn't matter what's the reason why for me buying right now. If I was just opening the charts, I wouldn't be buying right now. I would be looking to sell. So I'm looking for that either. I agree with you. Maybe if I was flat, I would wait and then I would long. I would go long. But now that I'm trying to fix this trade, I'm trying to anticipate that pullback in order to fix my first entry. So that's all I'm trying to accomplish.
I think that's so frustrating for me. Like when I think that's probably the most frustrating way, like part of trading, when you when you say fix the position. I'm like that is so stressful to me. Looking at a position in drawdown and then just waiting for price to kind of like come back down to break even or closer to entry price to close it and and you're sitting there just waiting for that to happen. I do not have the patience for that at all. But it's weird.
But in the other hand, in the other hand, you cannot go long right now. You agree?
Yeah, exactly. So and closing the short means that you don't close the short if you can't go long.
Correct.
But
That's kind of the thinking behind the.
it's
the
funny
trade.
because
Now,
I say that I don't have the discipline. I don't have I don't have the patience to wait for that, but I have the patience to hold the trade for 2 days. It's weird how it's like different type of patience. I think it comes down to personality. I think we had the Michael the CMT guy last week, I believe, or the week before that. He talked about the book, the Thinking Fast and Slow, and he said that like there's two types of people, and people that are more leaning towards the idea of being good at the slow type of thinking would be better suited as swing traders, while if you're the type of person that is very good with the fast type of thinking, then scalping would probably be your thing. And for me, I like to look at the overview. I like to take it easy, take it a bit slow, give it some more time to develop, and so I think it's all what it comes down to is personality, basically. But man, GBP and pound dollar here is making some weird moves. We had that initial reaction on the inflation numbers, then it went all the way back down, and now it's like it's back up again within just a few hours. It's
a very it broke strongly to the upside, went 100 and something percent retracement, broke the lows, and now it's recovering the whole place. So right now it's telling you, okay, I'm building to move to the upside. Let's see if we can continue to the upside. It's been a challenging day. It's been a confusing day. It's not an ideal, directional or rangy day. It has been none of the above.
Yeah.
Yeah, at the beginning of the session, we discussed this opportunity that market might be retracing back to the origin of that impulsive move that was caused by the CPI, and it did just that. The only thing is that the recovery was a V-shaped recovery so far, so it did not have any retracements for a quasi setup that I typically trade for me to get an entry. So I'm seeing this and I want to be part of it, but I'm not. So I will be waiting for the rest of the day to see if it forms any kind of retracements again into those areas. And if not, then I'll just let it go. But it's a very nice move.
You wanna go long, right, Victor?
I want to go long. Yes. Course,
yes. So you want this recovery to give you like a pullback? Yeah, I understand.
Yeah, I was expecting this CPI move to be coming back into let's say, I'll put my screen. Let me see if I may. So this was the CPI, of course, and I was expecting it to come back to this order block on the H4, which is this one, actually the smaller one. It went through it, and there is another structure below it, but I was expecting to get, you see all these possible entry areas that I have marked down. This is a V-shaped recovery with no red shoulder, right? So I'm still waiting to see if it's going to make something like this before it continues, and if not, then I have to just accept that this is not mine, right? It's not my setup, so I can participate. But it's a very nice move from this low all the way up. Let me put the 1 hour. This is the area delineated by the two horizontal yellow lines that we discussed at the beginning of the session, that I said we have a structure, a H4 above us, but also another one below, and it took the lowest one to reverse price, and yeah, but it hasn't given an entry signal yet.
So gold is, oh, look at that, that's nice. That is That's exactly what you want to see.
I want to see now some momentum built to the downside, which is not.
Yeah.
I mean, I'm not out of the woods. I recognize there's a lot of momentum to the upside, and I see price action just trying to push even higher. I'm kind of, getting into the idea that it's going to be a losing setup, but if there's some, we're not done here, right? Okay, I'll keep reading this. Looks like it wants to break to the upside, but if it ends up, turning and building some momentum to the downside, then I'll be able to, to get out of the.
You're
trade.
You're gonna enter a new sell if you break the the lows here on the 1 minute. No.
Yeah, I don't think so. I think if it breaks, to the upside, then we're going for a full recovery and potentially break into the upside. So
Yeah.
it makes more sense killing this setup, killing this trade above the supply area, and if any, I wait and I'll see how market behaves once it's at that level, and then I'll decide if I short there or.
So you look at the low of the wick of the current 5-minute candle, or if it goes if it breaks that low, and you can see on the 1 minute it's quite clear. You have that top formation, and then what if it breaks that low? Will you enter a new short?
This low?
Yeah.
Yeah, I don't think so, because the first reaction from the supply wasn't as strong. It kind of struggled to go down. I don't see there's a lot of momentum to the downside. So adding another short, I think it only, adds exposure.
It creates more problem, more trades to save.
Correct. So it just looks like it's going to be a losing setup, and I'll wait to see what happens at the top, and then I'll see if there's any chance either to go short or to wait for the, I think this doesn't overcomplicate things, but if this picks momentum to the upside, this area will be like a fresh support or a fresh demand. So then waiting for a pullback towards this area, that would be a good setup to go long, if you know what I mean. So
yeah, definitely.
But we need just to wait and see what happens, how this unfolds.
So where did the idea of?
Yeah, we have a viewer who has this question about the idea to create, where did it come from? The idea to create the 5ers, and what is the origin of the firm's name? What is the 5er? What's the meaning behind it?
Yeah, so the original idea, by the way, I didn't found it. I run the company today, but I didn't found it. I didn't. So I know Gil, when he found it back in the 2016. He wanted to find the 5% most profitable days traders and fund them. There's this I don't know, this saying that most traders, or 95% of traders, end up losing money. So he wanted, through the evaluation programs, to find the 5% traders that can actually go and manage big money. So that's the idea behind the names. And to be honest, it's nice to think that today we have more than 5% of the 5ers traders that are successful. We managed to break or to improve the amount of the percentage of traders that actually manage to make money with us. So we're doing a good job.
There's also that there's we've done interviews with Gil on here when he talks about the history of founding the 5ers, and it's very interesting how he that basically began with him and a group of friends trading, and so it was born from the idea of the 5ers was born from trading, from a group of friends trading. It's created by traders, ran by traders. Every single one working for the company has trading experience. So that's what I love about the company. It's just trading through the whole company. Talking about trading, it's breaking out.
Yeah, I just close it. That's where you have to have this mental strength and discipline to your mental stop becomes a hard stop, and you keep that loss small, and you survive, and you leave another setup, and you leave another day in order to to get to your next setup and not blowing your account and anything. So
how would it affect you? Sorry, but because it might happen very soon. Like, how would it affect you if this current candle closes below the level again? How's that gonna?
And then retrace it.
Because it might happen,
It might happen. That happens also a lot. But I know it's a frustrating experience, sensation, but I don't care, because the largest loss I've ever had came from this idea that, okay, it would break against me, and I would keep saying myself, okay, they will eventually come back, or this will eventually become a false breakout, or eventually become, in my favor. And that one time that didn't come in my favor became my largest loss in my life. Okay, I ended up losing a lot of money. So I don't care. Many times this will, now fake, false breakout and come in your direction, and many times it will just continue against you. So I don't care about what happens now after I made the decision I needed to make. I know taking the loss was the right decision, and now, if any, I will have a new opportunity to go, to join the next movement. But I cannot feed my brain with these kind of thoughts, because those, they don't make me any good. Okay, they don't serve me in any way.
Another question.
It's just gonna create a bit more, So never mind. Good question. Let's cover that.
Yeah, and another great answer. It goes to the importance of being aware of your thoughts while executing in the market, accepting losses. It's very important, because it is those thoughts that will translate into actions, right? If we can be aware of those thoughts that lead us into bad habits, bad actions, we can control basically the results to some extent, of course, of things that happen to us, or what the results we get. So I think that's important, when you realize the thoughts that made you create that situation where you had that big loss, and you nip it from the beginning right away. When you see that thought, you think, okay, this thought I should not entertain, because that is what led me the last time to a big so I let it go, a big loss, so I let this thought go. We have another question from Hassan, asking how long did it take you, all of you, so it's all of three of us, to become profitable since you started trading? Who wants to go first?
My guess, Jonatan.
Okay, so how long did I don't have a specific number or a specific time, but what I can say, it was not weeks, it was not months, it was more like years, and I think that goes for most traders. I'm hesitant sharing how long it took for me to become profitable, because if it's 1 year for me, if it's 5 years for me, it doesn't really matter. All that matters is that you understand that it's going to take you a long time. It might take you a year, 2 years. Like I've even seen people saying like it took them almost 10 years to really become very profitable and get to the level where they are. So you have to focus on your own process, your own struggles in trading. And so if I tell you, yeah, it took me 1 year, and then you've been trading for 2 years and you're not profitable, that means nothing. It doesn't mean anything, So, but yeah, it took me a long time. It took me over a year. That's what I could say.
How about you, Saul?
It took it 3 months probably.
No, absolutely the opposite. When I started trading, there wasn't the amount of information available that there's today. So for me, it took me like 2 years to kind of grasp the any consistency. But I realized that after those 2 years, I kept improving and I kept learning, and I think today I'm even a better trader than I was, years back. But I remember after 2 years, I was at that point that okay, I'm doing things good. My equity curve is positive. I'm on the profitability side. I passed from being a losing trader to a break-even trader, and after 2 years, I was already in the profitable side of trading. But then it took me years and years in order to really master, all the aspects of trading that I can kind of master today.
Yeah, no, I've
go ahead.
just want to mention that I've been trading now for, I think it's almost 8 years, and the first 2 years I was trading one specific way of trading, and then I kind of developed into trading another way. And this year, and I would say actually since April, I've ever since I started with these live streams, I've tried to. So the first thing that happened was I tried to adjust my trading for the live trading room, which went horribly. That's not what it's supposed to be doing. And then I figured out, okay, so if I can't force myself to be an intraday trader or a scalper, I'm just gonna be trading exactly the way that I want to be trading. So I've actually adjusted my strategy even again after like 7, almost 8 years, which shows that you can always become more profitable, and you can always, like you said, you're more profitable now than you were, a couple of years ago. So we're always improving. Even if we're profitable now, we're always looking for ways to improve.
Yeah, absolutely.
Yeah, in my case, it was I would say around 3 years, but I can't really pinpoint it because it's such a gradual process. You fall and pick yourself up, and you just do that less often, and you see that progression. But when exactly do you consider yourself consistently profitable? I would say a number of years, but to me around 3 years. That's when I start seeing like a consistency, and with from time to time profitability, but especially consistency, going the equity sloping up. But it's a gradual process, and actually, as Jonatan said, it's not so much about the exact period that it takes, because everyone has a different journey. So what is important is that you have not too high of expectation, like unrealistic expectation, expecting it to be in months. That you learn a strategy. I know it. I'm going to the market. I'm going to win this amount of money each week or each month, because that's not going to happen that quickly. It takes a long time. I thought so too. When I started, I thought I will master this in 1 year. It did not take 1 year, and after 3 years, I just started seeing profitability. So it's a long process.
You know what's frustrating is I started trading, and I started trading with I had this idea of like, I want to be one of those cool guys who only use price action and horizontal levels, like it's pure naked charts. That is amazing, because in the beginning it's like, how do you understand where price is going if you're not having any indicators? Like, you need indicators to tell you to buy or sell. Like, this indicator is telling me the price is going to go up. Like, so for me in the beginning, like, there was this magic to look at the candles and understand where price is going. So in the beginning, like, I had horizontal levels and I had price action, and then I realized like, I'm going to be adding this indicator, and it, that's going to help, and then add this indicator and that indicator. And now the way I'm trading now, like 7 years later, is where I started. So it's a bit frustrating. That journey is like, you start with the basics, then you make it super advanced, and then you end up with the basic stuff again. Like you, Saul, you're trading price action. That's all you're doing. And I'm sure you went through a long journey of trying other indicators and things, right?
Yeah, that's right. I'm sorry, I was just reading some comments here, and I don't think indicators. There's nothing wrong with them. I think as long as you understand what they attempt to tell you or to show you, and is serving you, so go ahead. I don't judge anyone. If you like indicators, ICTs, whatever you want, whatever makes sense for you and works for you. I don't think there's better or worse. At some point, as I said, indicators, they started to be an obstacle for me, or to be something that's it's just distracting me, a distractor for me in the charts. So I just focus more on the charts and on the levels and all of that. But whatever.
I think you also want to you want to, like, if you are drawn to certain style of trading, you want to feel like you want to follow that. If you have a feeling for something, like gives for me, like I really want to be like I want to be able to trade like you. I want to be a scalper. I want to trade intraday, but it's not what I'm supposed to be doing. Like whenever I do that, it's like it doesn't work. It doesn't fit my personality, and I always get drawn towards one specific way of trading. And I think it's important for new people to kind of like realize, where you should be.
Yeah, I think that's the most difficult thing to do as a trader when you're trying to master this, is realizing and understanding the fact that whatever you've been taught, whatever strategy, everything that you get to learn in a course, in a video, whatever, you cannot take it just as is and apply it to your situation, because that's not going to work. You need to go through this process and this journey of self-discovery and adapting and tuning everything you learn out there, and adapting it to what makes sense for you and your lifestyle and your risk tolerance and all of that. So that I think that what takes the most time from traders to really understand, and then to go through that journey and adapt everything to what makes sense and work for each one of them.
Yeah. Definitely. I also was reading the comments. It's not doing this like talking, having conversations, reading the comments, looking at price action. It's not easy. But I wanted to say, you guys, one thing. You've seen that the giveaway link and the code has been in the comments as a pinned link in the comments for quite some time now. And this is what we're gonna do more in the future, where we put the link out there, and we're not always going to do it at the end of the live stream, because we want to make sure that the people that actually get into the giveaway for an account are the people that are active here in the live stream and actually watching the live streams and what we're doing right here. I do look at the likes here, and you guys did definitely like the fact that Saul came on, because we do have quite a few likes. If you can get that number up to 700, that would be awesome, so we can give away 7 accounts. What I wanted to say something. Yes, okay, so we have one person in the comment. He's been saying that we should give away more accounts, bigger accounts, now that Saul is here. We're not going to do that. However, we are almost at, I believe, 40,000 subscribers on our YouTube channel. And when we hit 40K, we are definitely going to do something big here with the YouTube channel. I haven't talked about this with Saul, but yeah, we're going to be giving away something. It's going to be big. It's going to be big.
Like it.
Yeah. All right, so I'm just going to be sending a message to Alex to see if he's available to help out with the giveaway, or if it's Wednesday, so we can't do that tomorrow.
By the way, there is a high impact news on dollar coming out, existing home sales. According to my FX book on the Forex Factory, it does not show, if I'm not mistaken. Yes, it does not show, but on my FX book, it does. So there's existing home sales coming up in 2 minutes. And I have a question actually for Saul.
Yeah.
While you're Jonatan, while you're waiting for Alex to respond, do you use, since you trade EU, GU, and gold, if I remember correctly, do you use the dollar index as an indicator or as a confluence for your trades or for your biases?
I don't. The index. I think we talked about this once, that the dollar index is mainly built by euro. So even if you open a trading view and you correlate the euro USD and the dollar index, you will see they're almost the same, just inversed. So for me, watching at the euro USD is kind of doing my data analysis on the dollar index. So back in the time, I used to watch it. Nice. Then I just dropped that and I just focus on euro, and then from there I go to other instruments.
All right. And we have seen through the session, I've seen a couple of people saying that they are interested in a Spanish, a few of them. So maybe we should consider that. But anyways, yes.
Yeah, let's talk about that. If you're happy to do that, Victor, we can do like a test, and we can publish that through our Spanish speakers traders, and we'll see how many will show up, and then we'll decide if we continue with that. But let's give it a try. And guys, if you see questions, any question that you think I should be answering, just please ask it. Because I'm not following.
Definitely, take your time here, guys, and ask whatever questions you have. I'll be. It seems that Alex is not responding, and we talked about this before in the live stream, but I really need access to that Gleam as well. Right now, Alex is the only one who has access, so he's the only one who can actually do the draw. But we need to figure out how to fix that. As you guys know, we're always looking for new ways of improving the live stream. Before we go into any questions, I just want to update you guys. I had a lot of updates, questions on the Bitcoin trade. Yes, the long that we closed yesterday, I'm still in this short. I got my stops in profits, but I'm still looking to take this down to the range EQ to breakout area. So the Bitcoin short is still open. The Euro USD short is open as well, and then the CAD USD CAD long is also open. So all of those three positions, I'm just keeping those open till it hits TP or stop loss, obviously. So what we're going to do, guys, is Alex is not going to be able to come on the live stream and do the draw, but make sure that you go into the link in the pinned comments. We do have 700 likes right now, which means we're going to give away 7 accounts. We're going to I'm gonna let Alex do that and probably do the draw. If you win an account, you will get an email from Gleam, and you will also get an email from Alex. If you don't get any emails, that means you did not win the account. And then on Monday, we will show all the winners, and we will take we'll take care of that as always. Let's see. We do have.
There was one question that I can't find anymore, but I remember.
There's one. I just want to mention that there's a guy here. He all of the live stream, he talked about the negative risk to reward. How, Saul, you made a video a while back, I think, on negative risk to reward. Do you care to share some insights on using why in what scenarios would it be okay to have a negative risk to reward? Because most new traders, they hear negative risk to reward, and it's like it's insane how you could be trading with that, right?
Yeah, it's counterintuitive, right? The thing is, you have the win rate and the risk reward. Okay, they're correlated. So in an ideal world, you have a strategy that can give you both positive risk reward and positive win rate. In reality, I don't know a lot of traders who can manage to have both positive. So you either have to have either a high win rate or a high risk reward ratio, and that will compensate the other one that it's not as high, or it's break even, or it's negative. So when you look at techniques of trading, position traders might have both positive risk reward and win rates. swing traders tend to have a positive risk reward and a break-even win rate, and scalpers tend to have a high win rate and a negative or break-even risk reward. So my stats, and I can maybe pull up the next session, I'll pull up the stats for this account, for example, and you will see how I managed to have like a 75% or 85% win rate, but that compensates the fact that I have a negative risk reward ratio. So as long as you have one of those high, you will end up making money.
Yeah, I think both me and Victor is so I think for me I have a low win rate and not high risk to reward, but I have a low win rate and I guess an average risk to reward. I know Victor has I'm not gonna say much, but I'm gonna say much, but I'm don't take it personally. Victor has a much lower win rate than me, but also a much higher risk to reward. Because like yesterday he closed the GBP USD, like he talked about how that was, you know, without accounting the lot size and risk management, like a 30R trade. And I like looked at him and I'm like, what do you mean? Like, what do you mean a 30R trade? But yeah, it's crazy.
Guys, I see here a question from Hassan. I'm 5ers traders. I believe it's the best in the industry. Thanks for that. How is the 5ers different from other firms, and why are there other firms being banned? So first, I invite you, Hassan, if you're a 5ers traders, come to tomorrow. We're going to have like a more closed conversation over Discord. Okay, we're going to be able to discuss some of these questions, for example. And next week we're going to have a Twitter space next Thursday, and we can also address some of these questions. Now, I don't know what other firms are doing. I cannot talk, and I don't want to talk about other things. And I don't think they are being banned. I have seen lately a lot of firms not being solvent enough, or being poorly managed, or struggling with technology issues and different things in different companies. I can tell you about the 5ers that I don't know if we're doing something different, but we have a solid risk management. We really care about risk management. That way we can stay aligned with the same interests with our traders. And we're very focused on good management, good solvency, good technology, good risk management, and yeah, that's how we've been from 2016. So that's it.
Nice. Yeah, guys, make sure that you go into the Discord. If you have an evaluation account or a funded account, you have access to the Discord. You just go to the hub, hub.5ers.com, go into your program dashboard, and then on the top right corner you'll find a link to join the Discord. All right, so we're actually above 2 hours here. I think we covered a lot of things here. I think we should continue next Monday, and we'll try to get Saul on more often to answer your questions, and also do some more of more live trading as well.
Absolutely.
And for the giveaway, we're gonna be sharing every winner on Monday. So make sure they come back on Monday, and we'll have all the winners. We'll do a double draw. We'll draw the winners from today, and then we'll do the winners on Monday as well. All right, Victor, Saul, anything else you want to share before we go?
I'm good. Thank you, guys.
Awesome.
Yeah, I'm happy to be part of today's session as always. See you guys soon, and thank you for your time. So,
all right, thanks
next
guys,
time.
And we'll see you all next Monday. Take care.
Bye guys.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other